So everyone's talking about gold and silver again. They've beaten equities, gold is shining. But before you rush to buy more, pause and ask, are you investing out of conviction or FOMO? This happens every cycle. When markets feel uncertain, inflation, elections, global wars, AI bubbles, investors start doubting equities and chasing what's recently gone up. Today it's gold and silver. A few years ago, it was small caps. Tomorrow it could be AI funds. But here's the truth. Markets reward patience, not panic. And asset allocation, not prediction. That builds wealth. So as per my experience, there are two types of investors. Category number one, the 100% equity conviction investor. The one who believes corporate growth and economics drive the long-term wealth. For them, gold's rally is just background noise. They stay invested and let temporary storms pass by. And category number two of investors, the emotionally driven investor. The one whose confidence shakes when equity underperforms for a year. They think, maybe I should have bought gold. These investors often buy what's already expensive and sell what's temporarily down. So how to balance your portfolio? So if you belong in this second group, you just need to balance. So don't go all in equities or rush all in gold. Instead, build a mix like 50-60% equity, 20-30% fixed income, and remaining, let's say 15-20% of gold. But here's the catch. Make the shift gradually over a year or two. Don't sell what's cheap and buy what's hot at its peak. So timing and perspective also matters. The big moves in gold are likely behind us. The best time to invest in gold was 2 years back, right? Not after the headlines is screaming record highs. So every time an asset class rallies, remember, you have to shoot where the rabbit will be, not where it already was. The global context. Globally, the US markets are inflated by AI hype. The S&P 500 is trading at 28 times earnings, with IT alone forming 35% of the index at 42 times valuation. See, this polarization between AI-driven optimism and everything else is setting up the stage for a correction. But that's exactly where India's strength lies. Our markets are less dependent on AI, our macros are improving, and our valuations are far healthier than the West. When the AI euphoria fades, India and other emerging markets will likely benefit from the shift in global capital flows. So what is the real lesson out of all this? Every bubble is built on the kernel of truth. The internet did change the world, but not as fast or profitable as early investors expected it to be. Similarly, AI will transform industries, but the winners are those who invest with discipline, who diversify smartly, and don't chase hype. So before you rush to buy gold or silver, ask yourself, is it your conviction or just your reaction to fear? True wealth isn't built on what's trending. It's built on balance, patience, asset allocation. Want to build a personalized asset allocation plan? You know whom to contact, the experienced professionals of Team Enrichwise today. If you like this video and would like to have more such insights, do subscribe to my channel and share it with your friends and family. Thank you so much.